What's up? It's Anthony here. Sorry I've been gone. I just got back to school and it's just been a mess with getting everything ready and getting back in the swing of things. But today we're going to be looking at the different trading strategies. These are just the basic strategies, or essentially the different types of tradings that people do when it comes to basic stock trading. And these are going to be really important for you because you got to find which one fits best for you and your goals, and which one makes most sense to you, and what clearly clicks in your brain for methods on how to achieve these certain trends and way to do these. So the first one that we're going to look at is the day trader. So what is a day trader? We all have heard this, the Jordan Belforts, the penny stock flippers, but really what a day trader is someone who buys or sells stocks or other investments and ends the trading day in an open position, meaning they have no stocks at the end of the day. So they have no stocks in the beginning of the day, they have no stocks in the end, and they only have stocks or their investments during the day. And what these guys do is they limit their risk by only being invested when their investments can be bought or sold. So when the market's closed, you obviously can't buy or sell, and so you're opened up to those risks of it either falling due to bad news in the afternoon, or you lose the potential, the opportunity lost of it gaining overnight, but then you just play it off in the next morning session. So what a day trader does is they work off of technical indicators. So they look at these things called candlestick charts, and they find certain trends and indicators which can then predict with some sort of accuracy based on what it is, on what the stock market is going to do coming up in the day. It's very intensive. You're constantly monitoring. Most day traders have like 4 or 6 computer screens opened up with all different charts and stocks and watch lists and forums running at all times. Extremely difficult. This is not easy. 92% of all traders fail this strategy. It is extremely hard. And of that 8% left, I think only 3 of them turn a big enough profit to do this full time. So only 3% of that 8%. Day trading is very difficult. It has a high reward though, to a lot of financial freedom with it, a lot of money to be earned in this. But like I said, high risk, high reward. It takes a large sum of capital to be able to do this. You really cannot trade with only $2,000 like some other investments you can do. And the reason you can't is because you'll just never make enough, and you'll always be digging yourself a hole when it comes commission time. Because yes, you can make your couple percent in a day, but commission's going to eat up a percent and a half, and it's going to be a really slow growth for you. And when there's something goes bad, it's going to really ding your account hard, and you got even a bigger hole to climb out of, or you got to earn over 100%, 150% to get back to where you were. Now, usually people recommend you need about 25 grand in equity to be able to do this. And the reason for it, there's actually like a legal protection for this. And if you do not have 25 grand in cash in an account, you actually cannot day trade more than 3 times over a 5 business day period. Otherwise, you get restrictions put on your account. And what these restrictions do is they simply take away your margin, so you can't margin trade, like in cash trade. Or what they do is they penalize your account, so you can only trade once like a stock has been fully processed, which takes 3 days. When you buy it, it takes 3 days for it to fully process, and when you sell it, it takes 3 days to fully process. So each day trade is going to take you a week to do. And this is not good because you can't get in and out, and you can get stuck with positions that are failing and not doing what you want to do. So like I said, I really don't recommend day trading unless you have a lot of money. The average return usually for a day trader is 12 to 15% a week, or not a week, a month. So obviously, it's got a high return. You're looking at about 144%, 150% over a year, which is obviously very significant. Obviously, higher than that is obviously a potential for it. But do not day trade unless you're really gonna go heavy into day trading. It's gonna be the only thing you do, because you're gonna spend a lot of your free time researching and spending time and learning these tricks, these techniques, these patterns, these indicators. Alright, so I'm going to move on to the next one. So before we move on to the next technique, I just want to show you what a day trader's chart looks like. And as you can see by these charts, these are charts spanned by an increment of 10 minutes. And then within those 10 minutes, each one of those bars represents a minute and how that stock has moved within the minute. They're called candlesticks. And what this chart is showing, a day trading chart, how these guys are figuring out certain positions and the different levels of support and resistance and how they are going to do this trade. And the thing with this is what you gotta be doing. You gotta be looking at these candlestick charts and you gotta be seeing every little candlestick means something to you, and then you gotta learn what each stick means. We'll go into this in a different video because it's very in depth, but I just want to show you guys what usually the trading chart, what the chart you're usually looking at when you are a day trader. So the next sort of option or strategy that you could do is being a swing trader. So what is a swing trader? It's not as open day trader, obviously days. What's swing? Well, swing trading is you're finding stocks and you're trying to ride the momentum of what that stock is doing, or you're trying to use overnight success what that stock is doing. So this isn't quite like day trading, but it's a very short trading. Usually a swing trader is considered someone that holds a position for over 24 hours, so overnight, and usually holds it for a max of several weeks. Most swing traders don't hold stuff for more than a couple weeks. Some guys will do months, but usually the typical day trader was in over 24 hours to 2 to 3 weeks as your time frame of doing this. And usually it's really the same thing as day trading. You're using momentum of other stocks and you're using technical indicators to figure out what is going on with that stock, but you're going to ride it out for longer periods. Usually a swing trader, you usually have a lot more safeties installed when you're trading to prevent big losses with this, and you can monitor it. Usually has big gains too, and it's a little bit more hands off, so it kind of rides that passive aggressive trading aspect where you're really aggressive at some points, but you're passive in others, just waiting for certain events to happen within the stocks. You're best to start with at least 10 to 20 grand if you're going to do this style. And the reason for it is because, same thing, you don't have a lot of capital. You can't be moving it in and out, and you can't risk bigger losses. And swing trading takes a lot of discipline to do because you got to have certain stop losses in there. A lot of guys only allow a 1% loss on that trade, then they sell it, never look back at it. Or they reallocate their position, try to figure out what's happening. Can I make a profit on this? And that discipline becomes very difficult. Usually you can figure you'll make 5 to 7% a month when swing trading. So you're looking at 60 to 80% a year you can make, which is obviously a huge percentage with this. I mean, there's obviously more, but I'm just taking the average for this that you can make out of. I really recommend swing trading. Swing trading is mainly what I do. I enjoy it the most, and you can do swing trading with bigger stocks as well, as long as you have the capital to buy enough. But it just allows for a lot greater focus, and you're not susceptible usually to larger or not the best news. You can ride those out a little bit where a day trader can't ride them out. So a day trader might have to take a loss out of the day, but for you just kind of ride out the bad news for a little bit, and bam, you're making your profit. And now we're going to look at a swing trading chart. So here with the swing trading chart, it's expanded over a couple days, and where the candlesticks represent an hour now instead of minutes. And what we're doing is we're looking at certain patterns and trends within it, and we're looking for certain indicators of historical data. So when a stock certainly hits a certain point or hits a certain bottom point or acts in a certain way, it should increase this much percentage afterwards. And that's what we're doing with this. We're essentially finding where the stock is falling, and we're going to go off of that. And because it's meeting a certain level of support, and that's what we're going off of, and that is what we can ride. Trading off support and resistance is a very easy way of making money. It's a very easy swing trading technique. And I'm using easy in quotation marks because it's the most simplest to understand, not necessarily actively do. So finally, out of the three here, we're going to look at long-term trading. And so long-term trading is the most typical and like practice trading in the world, because long-term trading is considered your 401ks, your Roths, even it's your brokerage too. You can do it in your brokerage if it's what you want. There's nothing wrong with that. But what a long-term is, it's simply you're holding on to a stock for an extended period of time. Has to be over a year. There's usually there's this weird like silver lining or gray cloud where like between a month and that year you're technically a long-term swing trader, which you're kind of riding the in between of the two styles. Not a lot of people do this, but some guys trade things quarterly. I personally don't do that, and I personally don't really have any knowledge when it comes to trading things quarterly or biannually. So I sort of forego that trading style because I also don't think it's very common. Usually people are only one of these three. But with long term, it's a year to 30 years to 100 years to you're passing it on. It's you buy a stock, you hold it for more than 365 days to infinity. And the good thing about this, like, it's got special benefits. So you get tax benefits. So you essentially get bumped down one tax bracket once you hold a stock over 365 days when it goes to your income tax and your capital gains. And it's sort of an incentive by the government to hold things, and it helps with volatility in the market when guys hold things long term instead of us doing the day and swing trading. The average return on this, you're looking at 15% a year plus dividends, whatever your dividends is, which can range from 2 to 3%, which is nice, but that gets paid out quarterly. But as you're going to see in our chart, this 15% is really just a dirty average. We can see quadrupling. You can see 400%. You could see 300%. You could see 2%. You could see no gain with long-term trading. But it is a lot safer because you can do a lot more knowledge, and you're going off a lot of historical trends and historical data than when doing technical and analytical chart data, which I think historical tends to be safer, especially when you just pay attention to the news and basic trends that are going on. With a long-term trading account, you can do this with $2,000, which I recommend is the minimal startup. And the reason you can do this with $2,000 is you're keeping it in there, so that commission really never affects you, which is good. And when you never sell a stock, you don't have to pay capital gains on it, so you don't have to worry about the taxes come tax time, unless you do sell it after that year-long period. But if you have $2,000 and you're making your 300%, bam, you got $6,000 now. And then you wait another year, and you double it. You make $12,000 in 2 years. Like, you're up a lot. And so with long-term trading, there's obviously, I think, a bigger potential to gain money in the long run if you have the discipline. Or like I said, there's a lot of times you can lose a lot of money on long-term trading as well if you're not paying attention. Long-term trading is super safe when you pay attention because you're understanding what's happening in the market, and you can pull out prior to long-term, prior to hitting that 365 mark, which is okay if you don't think the stock's going to bounce back. But on the flip side, because you're holding it long-term, you're not as susceptible to the volatility in the market. You ride the ups and downs through the market, and you hopefully and should end up by the end of the year. And now we're going to look at a long-term chart. You guys are probably going to be very familiar with this chart. So this chart is a chart of Amazon. And this is obviously over an extended year period, but we can really look at how explosive and how high earning potential some of these can be, especially in this tech sector. I'm not saying go and invest in the tech sector if you're not comfortable with it and you don't know what you're doing. But as an example, with Amazon being such a huge success and growth, and it's sort of being an oddball in the situation, most stocks don't see this type of chart or this type of growth. But this is stuff that you can't experience. This is the type of growth you can't experience by just riding it out. By being with the company that thinks it has a bright future and that you're paying attention to how they're growing and how their management is, you can grow like an Amazon, and your account can grow like this, where you're only buying the stock for $30. 10 years later, it's at $2,000. It's huge, huge gains. And it's nothing you'll ever get anywhere else. But you run the risk of ending up with the GM where something bad happens and bankruptcy occurs. you have that risk. But I highly recommend long-term trading, which is very easy to get into because it's just a lot of historical data you're looking at for beginners, and you write it out, you build up your capital over that year, 2 year period, and then you can start doing other trading methods once you have enough money. Thanks for watching, guys. Make sure to like and subscribe. I promise to be uploading more. Just with school starting here, I got super busy and super distracted with a bunch of things. I promise I'll be uploading regularly from now on. We're going to start getting a little bit more advanced things now that you guys are understanding things and getting more into it. So, like I said, hit that bell button so you see the notification comes up. Make sure to comment if you have any questions or anything you'd like to see. Catch you in the next one, guys.